Welcome to the Standard Deviations podcast, presented by Orion Advisor Solutions and hosted by Dr. Daniel Crosby, Orion's Chief Behavioral Officer and New York Times best-selling author. Each week, Dr. Crosby interviews a fascinating new guest on a range of compelling topics, from literature to psychology to financial wellness. To learn more about Dr. Crosby's behavioral finance work at Orion, visit www.orion.com.
Hello and welcome to Standard Deviations. I'm your host, Dr. Daniel Crosby. I am joined today by my friend and former colleague, Trey Williams. Trey is an entrepreneur and he has written a business book that is on my Mount Rushmore. He is here today to talk about what I think is the best book I've ever read on American entrepreneurship. So he didn't know I was going to say that, but welcome to the show, Trey.
Wow, that was very flattering. Thanks so much for having me. I'm excited to be here.
Absolutely. So you're on my Mount Rushmore. Who else is there with you? If you're doing your Mount Rushmore, who else is sitting there on the mountain with you?
You know what's interesting is recently I enjoyed David Epstein's range quite a bit, and it's probably a subjective perspective there because I'm a bit of a Renaissance man and didn't have a depth of knowledge about individual subjects until late in life, and it really celebrates those whose skills have are more wide than deep. And it's not a direct business book, but recently I finished Affluence Without Abundance by James Sussman. And it really speaks to the entrepreneurship mind of having focused, and that focus requires sort of a rejection of materialism. Really enjoyed both of those books.
Fantastic suggestions, not on every business list, but I'd expect nothing less from you. So Corona broke my brain. I haven't been able to read. I have never read less in my life than I have in the last year, but I've never played guitar more. I've spent more time outside. I've spent more time doing music, but reading, after homeschooling 3 kids and doing a demanding job, reading has fallen by the wayside. So as soon as I get that vaccine, those two are going on the shelf. So Trey, the name of your forthcoming book is Boss Brain, which is a bit of a departure for a book on entrepreneurship. You start this conversation in sort of an unexpected place. It's all about evolutionary psychology and brain science, which of course I loved. Why start there?
Well, you know, I say this a lot. As enlightened as we consider ourselves to be, we're still subject to ancient and really insidious biases. I mean, you've explored and documented this more than just about anyone I know as it relates to money and investing. But those same pitfalls exist everywhere in our lives, not just within the financial world. And since employment and money are inextricably linked, it goes without saying that we really can't trust ourselves to navigate the space between traditional employment and self-employment without a model to follow. I mean, just as behavioral finance requires a decision-making model, I feel like entrepreneurship and the journey toward it does as well.
Yeah. Now, is that at all like deterministic, or does that hamper us when we learn that, like, hey, you're just kind of wired funny to do this stuff? Or can we empower ourselves and embolden ourselves by understanding how our funny wiring?
You know, I think I may be stealing one of your quotes to say that understanding your biases isn't enough to overcome them. Mm-hmm. And I think knowing those instincts, the wiring toward entrepreneurship, is a step with reconciling that it's okay to feel unfulfilled, even when your life may otherwise, someone else might be envious of the life you have and you still unfulfilled. And I think there's a lot of guilt folks have about that feeling. They say, I've got this great job, I've got this great house, but I still don't have the life satisfaction that I would have if I was in control of my own destiny.
Yeah. When I was doing counseling, one of the most common things that I heard, one of the most sort of common presenting concerns was people who were absolutely miserable, but couldn't point to anything in their life that would make them miserable on their face. Like, my family loves me. I have, I'm paying all my bills and things like this. And I think one of the things that you've done so well in Boss Brain is speak to some of those sneaky ways in which we lie to ourselves, those sneaky ways in which we betray ourselves and don't follow our passions. And it can be soul crushing in sort of an insidious, sneaky way. Anything to say about the soul-crushing nature of the modern workplace?
Well, it's your head is telling you one thing, your heart is telling you one thing, and perhaps there's even the unrecognized society is telling you another. And we have this need to be accepted and assimilate into society and feel that we're welcomed with those around us, and that makes us feel obligated to do things the way they do. And that's not necessarily a good thing or bad thing, but it could most definitely be soul crushing if, despite your best efforts, you still don't feel fulfilled.
Yeah. So one of the things you're going to find out, because this book hasn't come out yet, it's coming out soon. In fact, it'll probably be out or shortly out by the time this airs. One of the things that you're going to find out, because you're going to go on a media tour, is that podcast hosts like myself are going to try and pump you for every ounce of goodness in this book, so that by the time someone's listened to the podcast, they have no need of buying the book. Don't fall prey to this. And as author to author, you talk about 4 primary instincts in boss brain. Now, I want you to tell us what the 4 are, but don't explain all 4, because these listeners have to go buy the book. But maybe talk about the 4 high level and then go a little deeper with one of your favorites, if you would.
Yeah. So when I normally talk about the 4 primary entrepreneurial instincts wired into your brains, I say these words and people think, well, that sounds really simple. And they're unimpressed when you first lay the terms out. But what's important to remember is how these things work in tandem and how they flow within a cycle and have been part of the rise of humanity. And the first instinct is belief, on which everything is predicated. The second is accountability. The third is focus. And the fourth is creativity. Now, each one of these 4 have subcomponents that we discuss in the book. But particularly, let's just talk about accountability. That one is kind of at a flashpoint in the nation right now. The subcomponents of accountability begin with control. Now, I hear a lot of people talking about entrepreneurship and saying, well, you have to take control of this, you have to take control of that. Well, the bad news is you had control. You just gave it over to something else. So you're not really taking control in as much as you're recapturing it. And once you've recaptured that control over your life, then you begin to work through what is the second subcomponent, which is process. I think you'll like this one because you can't manage what you don't measure. And without a process, you really have no way to understand whether you are being productive or just being busy. The last component is diligence, because at some points in that process, you're going to fail. It's nearly guaranteed. And if you don't fail in early and often, you're likely to fail in a big, significant, major way down the road. So it's something that should be embraced. And when you hit those barriers, the diligence to continue maintaining your control, not relinquish it, and then work through your process again and again is the key to accountability.
So, again, we're gonna apparently harken back to my days as a therapist a few times in this conversation. But one of the things that I found when I was doing therapy is that people actually ceded control. They actually gave up control in some ways where they thought they were actually gaining control. Do you ever see this where people in the pursuit of being responsible or in the pursuit of keeping things in check or things in control actually give control to someone else?
Yeah, and it's more because they've confused gaining control with predictability, right? They cede their control because what they find out of that is predictability and stability, and that makes their life feel less chaotic. Even though that predictability is not within their realm to control, they feel better and safer as a result. So we've confused predictability with control quite a bit, and therefore we started to cede it over to anything that offers us that predictable reward.
Yeah, one of the things that I think I encountered time and again, I've talked about it on this podcast before, was what I sort of coined a term for was emotional graying. So it was people who were scared to risk, right? So they tried to live in this in-between space. They didn't want things to be really bad. The way that they were living was pretty safe and risk-free. So things were never going to really quite be very good either. And then they just kind of lived in this middle zone. But then they arrived at a point in their lives when they were profoundly unhappy because none of their dreams were coming true. None of the things they had thought were coming to fruition. So I think there's a lot of risk. I think there's a lot of risk in not taking any risk. And I think there's a lot of loss of control in trying to maintain total control. Life's full of these weird paradoxes, I think.
Yeah, absolutely. What is the old saying that nothing is more absurd than certainty?
Yeah, absolutely. Well, if 2020 taught us anything, right? So
right.
So one of the things that I've heard you talk about recently is that currently, I believe I've got the numbers right, that 93% of us are currently working for the other 7%. But you're looking at sort of these larger macro trends. You see where this is headed, and you say without some careful thought and some coordination, it could be that sooner than later, 99% of us are working for 1% of us. Talk about these trends and why you think they're problematic.
So as recently as the late 90s, we still had a 13 or so percent self-employment in the United States. And despite all of the hype over the gig economy, that number has been cut in half over the past 25 years. So we're at around 7% right now. And based on that trend, the simple math shows that somewhere in the mid-2040s, mid-2045, somewhere in there, roughly 99% of us are going to work for the other 1%. And this is problematic for a number of reasons. I mean, not to mention the civil unrest associated with the idea of all the wealth being concentrated in 1%. Imagine how everyone would feel if all the jobs were concentrated, right, among the 1%. So, but the real problem for us on a less hyperbolic issue is when the vast majority of jobs are offered by only a few employers, I mean, a few relatively speaking, then there's lots of negative consequences. When open market competition is lost, wages become stagnant, upward mobility is greatly limited, and then simultaneously, employers work harder to maintain their monopoly, their market share, and they spend less research on innovation and bringing us forward as a community and as a country. So we see this in small towns for centuries, where when you go to a small town and there's one or two significant employers and that employs all of that populace, the entire area becomes less innovative. I mean, if you ever been to a small town and say, wow, it's like going back in time, there's a really good reason for that.
Mm-hmm. Yeah, I mean, you and I both lived in North Alabama for a time. That's where I grew up. And for a very long time, my hometown was really sort of a one-trick pony, right? Economically, there was one game in town. And when government contracts dried up, I think about 60 or 70 years ago, that town was nearly brought to its knees, and they really had to diversify. And of course, they're doing better now. But you see, those of us who grew up in towns where there was sort of this monopolistic mindset, or there was really only one game in town, have really seen firsthand how dangerous it can be for all of the power to sit with such a small group of people.
Yeah, absolutely. And that's a very tangible way to represent it. Where I grew up in a small town in South Georgia, you either worked for the railroad or you worked for the timber company. It was one or the other, and everyone else was trying to get a job with one of those two. So very similar situation.
Yeah, absolutely. So I'm really interested in self-deception. Again, this is one of the things that I think, from a behavioral finance perspective, people don't understand the degree to which we all lie to ourselves, the degree to which we give ourselves sort of self-talk that's unrealistic and how much that gets in our way. And in one of your early chapters, you talk about the lies we tell ourselves and we tell each other. And specifically, you talk about this sort of schizophrenic dual mandate that's, I think part of the American DNA almost, that we receive two simultaneous competing messages. Like, right, on the one hand, we're told, hey, go follow your dreams, go dream big, do what makes you feel good. And then on the other hand, we're told to pursue respectability, go work a 9-to-5 and get a gold watch. So talk about these competing messages and sort of how we reconcile.
Yeah, so the problem is that we've forgotten that those messages were really intended for two audiences. And for millennia, it was up to you to decide which one of those audiences you were within. But both messages are very, very important. The problem is we've forgotten how important that balance between those two really is. So Mother Nature balanced us with these instincts. So imagine 2,000 years ago, there's a group of entrepreneurial spirited folks on the shores somewhere of a country that it no longer exists. And they say, we're going to build boats. We're going to sail beyond the horizon because I think something wonderful is there and I want to go there and build my legacy. And while they were doing that, there was most certainly someone on the shore looking at them and saying, what the heck are you guys doing? Are you insane? Stay right here where we are, where everything is great and we have food and safety, et cetera, et cetera. And that was incredibly important at that time to keep us all off a boat that may go beyond the horizon and sink and kill the species, right? So we needed this balance. But we've really tipped the scales. Now that need for certainty in the world that we live in now is so readily accessible that it's smothering the more entrepreneurial optimistic vision. So we've all subscribed to this need for certainty vision where we're staying on the shores and fewer people are building a raft and sailing beyond the horizon.
Well, and there's so many things I have to say about this. What's fascinating is on the one hand, the base of Maslow's hierarchy, right? At least in the West, at least in the United States and Western Europe and other developed countries, the base of Maslow's hierarchy has never been more easily met, right? I think even, I know there's hunger and there's want in this country and other wealthy countries. I'm not trying to dismiss that. But when you look on a long enough timeline, we are better off on the whole in terms of just having a warm place to sleep and enough calories to put in our body and less violence than at any time in human history. And yet we seem so risk averse. And in some ways we seem so, wedded to this idea of certainty and wedded to this complacency. So how do you account for that sort of weird finding that we're in some respects safer than we've ever been, but in other respects, less willing to take a risk and move up that hierarchy? So
here's an interesting statistic. The poverty level in the United States is $12,000, $13,000 a year. The median income for the planet is $10,000 a year. Mm-hmm. And that's adjusted for US dollars. So what that means is that the poorest people in the United States earn 20% more than half the globe. Mm-hmm. And when you say it like that, I, like you, would never want to dismiss the challenges that the poorest among us face. And we certainly want to bring as many people out of poverty as possible. But their safety and their predictability has never been more predictable. And the challenge and what it does to entrepreneurship is we speak about in the book, the Goldilocks zone. And the Goldilocks zone is that point in your life where your safety and security is predictable enough that you are willing to invite a little bit of risk. Mm-hmm. But it is not so predictable that you're completely averse to change. And we see the vast majority of new businesses being founded within the middle class, and that's precisely where the Goldilocks zone lives. Mm-hmm. You're not so stuck in the cycle of debt and need and time poverty that you can't climb out, and you're not so wealthy and affluent that you have no desire to change that situation. And as the middle class in the United States began to rise in the mid-1940s, you see entrepreneurship start to decline. And as the middle class has continued to rise, they've almost been tied together in corollary so that the better the standard of living of the United States, the lower the levels of entrepreneurship.
Yeah, I love this notion of the Goldilocks zone, well-resourced enough that you can take the risk because, as the quote says, to a poor man, bread is God, right? Like if you don't have enough mm-hmm. to eat, if you don't have a place to stay, you have no time for innovation, you have no time for creativity. You're just trying to make it to your next meal. So you need to be well-resourced enough to have the space to dream a little bit. But then on the other end of the spectrum, right? if you're so fat and happy, to use an Alabama term, right? If you're so sort of fat
Right.
and every time I call my dad, hey dad, how you doing? Fat and happy. so,
Right.
so yeah, I mean, if you're sort of so fat and happy that, so complacent because of your wealth, you're going to be as equally unproductive, at least from perhaps an entrepreneurial sense. Yeah, I like that. So Trey, I'm going back to this fishing village 2,000 years ago, right? I'm thinking about this, and there's the group of people sitting on the shore going, "You're crazy," right? You're crazy, and it occurs to me that we all have those people in our lives, right? I'm of course happy in the warm embrace of W-2 employment right now, but have been an entrepreneur for many years myself. And when I went out on my own, lots of people in my life told me that you're crazy, this is stupid, the timing was bad. It was during the Great Recession. They may have had a point, but it all worked out, right? How do we know when to listen to those voices and when to dismiss them? Because we're all familiar, right? We're all familiar with billionaires and wildly successful entrepreneurs who were doubted, and Harry Potter got rejected 200 times or whatever. We hear these stories of wild success that was overlooked. And yet I also see these people on American Idol, right? Back when American Idol was a thing. And you're just like, why couldn't someone have told you that you're terrible at singing and saved you?
Right.
Saved you this really terrible moment in your life. So how do you know when to listen to the naysayers as people who love you and want to protect you? And how do you know when to ignore them? That seems like a really important conversation to me.
Yeah. So people often phrase this question as, let's say someone feels stuck in traditional employment and they want to be an entrepreneur. How do they get there? Right. And my standard response to this is, you don't get there. You were born with the instincts that you need to be an entrepreneur. You have to unlearn how to be an employee. So our entire lives we're taught to be an employee. The school bell rings and we change classes the same way your phone gives you a reminder to go to your next conference meeting. There's no coincidence that the school day matches the work day almost exactly. I mean, it is ingrained in us from the time we're kindergarten age. So you're unlearning how to live and think like an employee. And you could do this gradually over time, but the more you live and think like an entrepreneur, the more those opportunities are going to become apparent to you. And the more you're going to recognize the chance to capture market opportunity in white space or blue ocean strategies. Whereas if you continue to think and live like an employee, you don't see those when they happen. Mm-hmm. So it's really more about unconditioning yourself and revealing those instincts that you were born with so that you can take advantage of opportunity when it arises.
Yeah. One of the things I have this whole, it's very long, a list of books that I want to write one day. And one of the books that I want to write is Unlearning, right? I feel like unlearning all the bad lessons that we've been taught and all of the ways that we've been conditioned, as you talked about. We've got a school day that was based on old factory schedules,
right.
In a U.S. economy where 80% of us make a living with our minds now. And some of it makes no sense. And we're just sort of stuck in these old ways of doing things. So I love this idea of sort of scraping away bad ideas.
Yeah, the vast majority of the systems that we live on, our commutes, our work day, our school days, are all relics of the Industrial Revolution. Mm-hmm. And I say this often, and I think it's a great metaphor for understanding why you may feel unfulfilled while living within those systems. If we compressed the existence of your brain, the one that's instinctively telling you what you should and shouldn't do, down to 60 seconds, the idea that you're supposed to go to school, go to college, get a job, buy a house, work for 40 years, get a gold watch, has existed for 0.4 of those 60 seconds. Mm-hmm. So your brain ticked for 59 and a half seconds before it had to deal with this expectation. So how could we not expect that there would be some real miswiring for us to deal with the modern world?
What does it take? What does it take to sort of throw off the shackles of industrial revolution type thinking, right? Like when does this change? Because I mean, it seems like it's working for a lot of folks. The 7% that employ us, it's working for. Like, what does it take to get to a more human-centered, entrepreneurially minded work setup?
So I'm tackling this down two strategies concurrently. The book's obviously aimed at the individual. And I speak directly to that aspiring entrepreneur and give them a system to throw those shackles off. But I'm also working with a few municipalities and chambers of commerce and city governments who recognize the liability that they have in their community because of low levels of entrepreneurship or upward mobility. And they're trying to do something about that from a policy standpoint right now. And I got to say, there's some really exciting stuff happening for those who see the potential consequences of concentrated job opportunity. And I have yet to be able to marry those strategies. But what I'm hoping might happen is that the book becomes a conduit for the individual to show those who are forming policy what good policy should look like, and for those who are forming policy to embrace those individuals as part of the long-term solution for their community.
So you mentioned some of the work you're doing in communities and some of the work you're doing with municipalities. One of the most fascinating parts of your message to me is that you talk a lot about the societal implications of this and the societal benefits that you attribute to small business ownership. Can you talk about some of those benefits and why cities of all things are embracing a message about entrepreneurship?
Yeah, so it's not always economic. And I know that's the message that screams the loudest. And economic development is very, very important. But there's some that are much more human that I think we all should listen to and embrace. Entrepreneurs give on average about $1,200 more per year to charitable institutions than traditionally employed individuals. Their children are 7 to 8 times more likely to be entrepreneurs themselves. They vote more often. They're more civically engaged. They volunteer their time to community organizations more. And they consider they have much, much higher levels of life satisfaction. So all of those positive attributes of entrepreneurship really ripple throughout society because the entrepreneur is much more pay it forward and much more involved on a community level. Now, I think the most important thing to note here is that entrepreneurs' children are 7 to 8 times more likely to be entrepreneurs themselves, because that's what's going to change the long game, right? That's what's going to do more than give us an uptick in entrepreneurship for the next 5 years. That's what's going to create generational wealth. And when a child is raised in an entrepreneurial environment, their likelihood of being an entrepreneur increases exponentially. And as a result, 20, 30 years from now, these positive effects are still rippling throughout society.
And so that's what we got to do to start to reverse those numbers. I'm working on a hot sauce company with my son right now.
Right.
Standard deviations listeners, get ready to pony up for some standard deviations hot sauce. The name is being workshopped. We don't know it yet.
Right.
My daughter and I are working on a STEM website for women and girls, because that's an interest of hers. So, I see this, right? Like I see working with my own children, I've experienced the joys and the fruits of entrepreneurship. I'm teaching it to them, and I'm eating a lot of hot sauce in the interim. So, while we're on this topic, something that I feared pre-COVID that candidly COVID has made so much worse is just the wealth disparity in this country. Now, I'm coming to you from the epicenter of the problem. Atlanta is the city in America with the worst wealth inequality. We got some of the richest people in the world here, and some of the poorest folks in the country here. Now, what's fascinating is through COVID, unemployment among the top 10% of earners was relatively unchanged. Like it was low before this started, it remains low. But among the lowest paid folks in the country, unemployment reached a peak of about 40%. So again, the rich have gotten richer. Our stock portfolios have exploded while regular hardworking folks suffered. Would an increase in entrepreneurship increase or decrease the wealth disparity in this country? Because I think it's a big, big problem.
To use the metaphor that we just talked about with entrepreneurship rippling through society, imagine you have a bucket that is filled with water, and it is the local economy for where you live. Every pebble you drop into that bucket is an entrepreneur, and it won't take very many pebbles before that bucket starts to run over and spill over into whatever is around it. And if there are other buckets, then they start to fill as well. And that's really the effect that entrepreneurship has. If you go to you can go to the National Bureau of Labor Statistics and look this up, and it's mind-boggling to see how consistent it is. Communities that have the highest level of self-employment are safer communities with lower levels of crime, all types of crime. They have higher levels of growth. They have higher standards of living. They have a longer life expectancy. They have greater levels of education. And the list just goes on and on and on. And now I recognize that some may say, well, this may be the chicken and the egg. When you're looking at people who have these resources are more likely to be self-employed. But that's not what the numbers play out, because the same statistics apply to entrepreneurs who maybe earn a more average income. They just do it through self-employment. So it's proven that even those who earn an average income relative to the W-2 employee, these life satisfaction and these positive attributes still hold true. And I think that's spillover, is that inevitable spillover that's impossible to avoid, is what helps eliminate that wealth disparity.
Now, I want to keep on this topic for a minute and this sort of chicken and egg conversation. A Black founder on Twitter recently shared some numbers with me that were sort of shocking to me. I had heard these numbers, I think, but I had forgotten them, and I was preparing for our conversation. And so this gentleman said, basically something to the effect of, he cited the exact numbers. He said, here's the level of wealth for the average Black family. Here's the level of wealth for the average white family. And it was 10x for white families what it is for Black families on average. And he said effectively, like, look, the advice to go raise a friends and families round of, to get your startup off the ground is not equally within reach for everyone in this country. So if you're from a family or you're from a community that doesn't have the resources to give you this sort of first leg up, right? Where do you go for people who are from families or communities that aren't as well resourced? They don't have the same safety net. What's your advice to folks like this?
Yeah, so I'm very sensitive to this when speaking about the availability of entrepreneurialism to everyone. I grew up in a town where about almost 20% of the population live below the poverty line now. And to put that into perspective, when I lived there was about 33,000 people in the county, and now there are 19,000 people in the county. So there's just been this mass exodus because of the lack of availability of jobs and innovation. And that goes without saying that there's some generational poverty there. So generational poverty is, in my opinion, one of the few tangible barriers to entrepreneurship in America. So I say this to those individuals who found themselves there. Netflix conquered Blockbuster with a postage stamp. They didn't invent a new business model. They just tweaked an existing model slightly in a way that was more attractive to the consumer. Another example would be the Dodge brothers didn't reinvent the wheel. They just added ball bearings to their axles, and as a result, Henry Ford chose those axles for his Model T, and Dodge was born. So I think the genius behind those were that they took an existing business model, they did it better, and then they made it affordable and available to the masses. The Model T Ford, when it came out, was sold for $800. That's $18,000 in today's money. That's a pretty cheap brand new car in today's world. That's why Henry Ford absolutely captured all of the market share there was he tweaked it in a way that made it available to the masses, and then the market share followed. So I would say not to feel constrained by the availability of capital, because those limits don't put any cages around your ability to innovate and find opportunity where existing business models are falling short of consumer demand.
It's a great message, because one of the things that I enjoy about Twitter is I follow a broad swath of people there. One of them just raised $100 million for
Holy cow.
Right? Good work. So biggest round in the history of Utah entrepreneurship. So just raised $100 million for a crypto tax play, right? Bravo. Well done. But there's also people on there doing very well, literally investing in porta potties and rental units and plumbing. And, it doesn't have to be sexy. It doesn't have to be flashy. Your own business, right? You run a trucking school, right? Talk about that for a minute.
Yeah, so there's always been this lack of recognition for the available profits that exist in companies that aren't that incredibly sexy. I'm sure there's a reason why every mobster movie in the world, they run the trash business, right? And it's one that no one wants to run. So we see this happening quite a bit right now. Not a lot of folks want to be electricians. They don't want to be carpenters. They don't want to be plumbers. They surely don't want to be truck drivers. And I think we all learned last March, when we were looking beneath the vanity cabinet in our bathroom for an extra roll of toilet paper, how important truckers were to America. So about 80% of the goods that you bring into your house were moved on a truck in America, all other things being considered. And truck drivers really do keep us running. They keep America running. So I invested in Fleet Force because of two reasons. Number one, I saw the enormity of the opportunity and the pent-up demand for what will continue for at least a decade, if not two. We're just not where we can have autonomous trucks yet. And by the time we do get there, I feel like we'll probably have drone delivery anyway, and it would probably be a moot point. But number two, I like working with salt of the earth kind of folks who recognize the value of work ethic and the value of the American dollar and the value of sweat equity. And I'm fortunate enough to be surrounded by them at our truck driving school in Central Florida. And it's through that company where I have the opportunity to bring my model to bear and test my personal theories that we put forth in Boss Brain and make sure that their efficacy is what I want them to be for all the readers.
Yeah, perfect. Practicing what you preach. So Trey, the thing about the two of us is we could sit down and talk about caveman brains and the pillars of a high functioning society for all eternity and never feel the need to get to a point, right? I think you and I are both sort of philosophically minded. But for the people here who are going, okay, this is good stuff. The message resonates. What do we do? And I want you to speak to, what do we do at the macro and the micro level? So what can we as a society do if we embrace this message you brought to us today? What's something we can do as a society to move entrepreneurship forward? And what can I do as an individual to support this dream of entrepreneurship?
So let's talk about the macro first. I've been tackling this a lot lately with economic development councils and chambers of commerce. And it's so important that those organizations take a longer view of what their reason for existing and their mission really is. I've rarely met a president of a chamber of commerce who isn't all about trying to bring in some Amazon warehouse that's going to hire 2,000 people and boom, instantly create all these jobs. And that's not a bad thing. It's not. But what I need for them to hear is that concentration of what you consider to be an asset is also an enormous concentration of liability. Mm. And there's no difference between being heavy on one stock in your portfolio than being heavy on an enormous amount of employees being with one company. If they decide to leave, what are you going to do? And that's a real question. I'd like, if they're listening right now, what are you going to do? What are you going to do if a company that employs 17% of your populace decides to move out next year because they found some tax haven somewhere else? And suddenly you have 1 in 5 people jobless with no entrepreneurs in the community to offer them job growth. So you've got to take that long-term vision and understand that your efforts to bring in outside business and large employers has to be balanced. by nurturing and developing small business creation from within your community. That not only balances out the larger employers, but it also it breaks the generational cycle of poverty from those who are within it, and it raises those in the middle class up even higher. So on a micro level, I can't say this more simply except to say belief is reverse engineered. If you find yourself no longer believing in the inevitability of your dream, or that the business you wanted to start, you now feel is beyond your reach, you're not going to be able to wake up tomorrow and just change what you believe. Beliefs are reverse engineered. So many people don't take action because they've stopped believing in that possibility of success. But in order to believe again, you have to take action, even when you don't believe. So I don't want to call it the cliched leap of faith, but what I'm trying to say is by taking small actions, you begin to change the perspective you have of yourself. And by taking those small actions, you start to uncover the belief that has been smothered around you. So even if you're not in a place where you think you're ready, if you're not in a place where you believe in the inevitability of success, just do something. And that something will yield a result. And then figure out what to do with the result. And over the next few weeks, you'll find that spark of belief that be reignited within your brain.
Well, what you've just encapsulated so nicely is really the key to all positive behavioral change. I think one of the things that keeps people stuck in old ways of acting is thinking that they have to do it all or not do it at all, right? Like if I can't raise the 100 million, right? If I don't have the, if I don't have the VC connections and the development team and all these things, then why try, right? And what you're saying is, sketch out that logo, draw out the business plan, make the PowerPoint, whatever it is, like take that first step to get that business going and build upon that line upon line as you go forward. So as we begin to wrap up, this has been an absolutely fantastic conversation. As we begin to wrap up, I'm going to get on my soapbox for a minute. I don't know if I've ever done this on my podcast. I got to get on my soapbox for a minute though, because the second edition of my book, The Laws of Wealth, just came out. And I know as well as anyone what it takes to write a book, to market a book, to birth a book, to bring it into the world. And I just want everyone listening to this, if you have been intrigued, if your interest has been piqued, if any of this speaks to you, I would encourage you to go out and pick up a copy of Boss Brain, right? Go vote with your dollars, pick up the book, make it happen, because writing a book is a form of entrepreneurship too. So I think voting with our dollars is one of the most powerful ways we can bring about the kind of world we want, right? And so when you listen to an author on a podcast and you like what they have to say, go support them because they worked awfully hard on it. So Trey, if people want to learn more about your message, if they want to hire you to speak, if they want to learn more about you and everything you bring to the table, where can folks find you, your book, and your message?
So it's really easy. My name is spelled TRAWilliams.com, TRAWilliams.com. And there you'll find a link to pre-order the book on the website. And after you click on it, you're going to see a list of bonuses. There's going to be a bonus designed specifically for listeners of Standard Deviations. And those bonuses are going to include a variety of things from which you can choose that will include having the opportunity to put me on a Zoom call with a group of your clients who are thinking about starting a business, and let's have a discussion about what it means for them. And you can find differing levels of bonuses based on how many books that you pre-order there. But we have one designed specifically for your listeners, and I'm looking forward to be able to interact with them and engage with them at an individual level, which is really exciting part about the bonuses that we threw on to the pre-purchases. So TRAWilliams.com. Awesome.
Well, Standard Deviations listeners are the best folks on the planet. So go support the man, buy the book. Trey, thank you for all you've shared with us today, and congratulations on bringing this to the world.
It's an honor to be here, Daniel. Thank you for having me.
Thanks for tuning in to Standard Deviations. If you can't wait till next week for more behavioral finance insights, visit www.orion.com. All opinions expressed by Dr. Daniel Crosby and podcast guests are solely their own opinions and do not reflect the opinion of or endorsement by Orion and its affiliates, subsidiaries, and employees. This podcast is for informational purposes only and should not be relied upon as a basis for legal, tax, and investment decisions. The opinions are based upon information the participants consider reliable.